we do want to turn to those results out of Visa here. Total payment volume coming in at about $3 trillion, a little bit of a miss than what the street was expecting, but the shares are higher in after-hours trading. Diksha Gera joining us right now, senior financials analyst for Bloomberg Intelligence. Give us a sense here of what jumped out of you in this earnings report.
So I think three key things that I'm watching for. Firstly, consumer spend has remained healthy. So we're seeing about total volumes up 7%. People were worried about inflation impacting spend. But in fact, inflation has helped. And it may be because these networks are increasingly going after the smaller ticket items as well. Second thing, cross-border total was up 22%, excluding intra-Europe was up 31%. That's very encouraging. And there may be some tailwinds around that as Asia continues to open up. And thirdly, management commentary. So basically, they did not include a recessionary scenario in their fiscal 2023 planning. So what I want to see is how much of a nod does management give to a worsening macro environment in case of Visa today.
And it's interesting to see Visa shares now moving higher, up 1.5%. But we got MasterCard this morning, and the read from MasterCard, at least, was that card spending was going to slow, and that's going to hurt revenue growth. Are you seeing those same kind of concerns when you parse through these Visa numbers?
Yes, I think that's a very good point. But I would like to highlight one main difference between MasterCard and Visa. So MasterCard is less U.S. dependent as Visa is. If you looked at the cross-border numbers there, revenue was up 40% on a currency-neutral basis. So, and MasterCard did give a nod to a possibly worsened macroeconomic environment. And management said the positive side of that was that management still remains committed to positive operating leverage, even if the macro environment does weaken. We are hoping the same with Visa as well. And secondly, China opening up, that continues to be a tailwind for them. But you're right. I mean, the outlook, payment card networks have both basically remained somewhat agnostic to what's happening with the broader economy, and we're keen to figure out how much of an issue this will be for Visa in the commentary.
I'm curious, Diksha, when we talk about just looking at the payment space overall here and kind of who the potential winners and losers might be going forward in this environment here, is it fair to lump them all together, or are there clear distinctions between some of them that investors should be looking to?
So I think, particularly with regards to the card networks, I think that the space is evolving very quickly. We are seeing a lot of new entrants come into the space. We are seeing the economics kind of change as we go along. But what is really brave about these card networks is they are going after the new flows. They're not leaving things on the table. So if you looked at MasterCard's commentary today, they are launching their first buy now, pay later installment option with SoFi, which is a digital-only bank. They're launching embedded finance options where they're working with car manufacturers to make payments from the car. Like you're sitting and told you don't really need to swap your cards for that. And then they're focusing on small businesses. So they are going after the flows.